Now, decision, actually it's not even a decision yet, but a thought that Policybazaar has put forward in the possibility of entering the healthcare space. We don't know in what shape or form it's likely to be, but that has seen the stock markets hammer your stock down consecutively for the last 3 trading sessions. Now, as a founder, do you believe that if you're a listed entity, does that weigh in on your ability to take risks and your ability to diversify?
Okay, so I'll just mention 2-3 things, very different perspectives. See, typically businesses can be broadly classified into 2 different types of businesses. One is where you build a factory or a hotel or some asset. You spend 3 years, 5 years investing, you get some loan, and then you start to monetize. All the businesses that you are seeing here, we are digital businesses where you have to invest into 2 things only, marketing and tech broadly.
Yeah.
And because these are P&L expenses, every year you see the loss. So what we seem to be doing is that we are pushing out our profits into future by investing today. And the more you invest, that time frame may be even longer.
So you're saying the lack of profitability is by design at this point in time? Or when
profitability is a choice. I mean, you can have it today, you can have it after 5 years. If it helps you become stronger, and if it helps grow faster, it's a call that management team have to take at some point, right? Typically, like you have mentioned about growth and profits, I actually think of growth, scale, and profits.
Right.
Where growth is imperative, but scale gives the model that much more strength. And especially in a business like ours, where you talk to insurance companies, you have to have that scale to get the right sort of product or process innovation from them also, right? So we start to think of very, very long term from that perspective. Now, what typically happens in a public market versus private markets is private investors usually have an 8 to 10 year time frame, a lot of time depending on the fund time frames. Public markets usually will not have that long. It can be 3 months, it can be at the best 3-5 years, at the best, right? Second, private investors, you get to interact a lot. So they can go deep into data, they can go deep into strategy discussion with you. Public markets usually get 1 hour per quarter at the best. So again, the understanding of your business has to be shallow by design. So, as founders, as management team, you have to do what is right for the business. And our time frame may be 20 years, which is not the time frame that any public market investor is seeing.
Yeah.
But if it makes sense for the problem that you're trying to solve, you still do the right things. Like he mentioned about Blinkit, just around the IPO time, we started 3 new initiatives, all 3 loss-making. We started expanding into different cities for call center, for physical meetings, setting up the claim team. Everything is, technically a cost. But that is the right thing to do, and that's enabled us to grow faster today.
How do you see potential challenges? And let me address that from the lens of regulatory challenges, because those are the ones that are not in your control, to Alok's point that you can only control what you can control, and you have no control on things like regulations changing. Now, for instance, you talked about Blinkit, and that is slated to be the next big thing as far as the Zomato growth story is concerned. You suddenly have the government saying that, look, quick commerce is a problem. We need to look at how quick commerce is operating. You need to work with the Kirana stores. Do we need to bring in regulations specifically or not? Complaints have gone into various ministries at this point in time from various associations. When something like that happens, how do you deal with it? How do you cope with it? How much of a risk or a threat is it to your business?
I think it's part of building a large business. I think same thing happened with the food delivery business maybe 3 years ago around the time of our IPO. I mean, suddenly the entire country, the political system, the regulatory system discovers a new business, right? And I think it's only fair that they want to appreciate it more. And we've been, last 2-3 years that has happened for the food delivery business, where, now there is finally appreciation of how that business works and helps the country and the small restaurants and the delivery partners across various departments of the government. And I think we're totally open to engaging with the government and regulators on going through a similar journey with the quick commerce business. And I think it's a duty to do that, and to make sure we take any feedback that comes out of that process and
is the discussion and dialogue ongoing?
It always is. I think, I mean, since we've become public, I think we've become better at it. And we're trying to sort of engage more and more with everyone.
Kunur, for people who, they've already IPO'd and we've heard from them on their own experiences. But for those who are looking at the possibility of IPOing, haven't filed their papers yet, what should they be mindful of? What should they look at? What should they consider? What should they weigh in on?
I think the first point is the reason which we started this discussion is the why, right? An IPO is not because suddenly you're seeing some crazy markets and there are a lot of deals happening. That's never the starting point to do. I think there is...
Could be a temptation for many, though.
It is a temptation, but you need to take stock of the business, whether you are ready to go to public market, sort of you like it or not, you need to talk to investors, give sort of communications in terms of what you're going to do, quarterly disclosures, etc. And private companies, depending on the stage you are not always used to doing that. So I think those things are important to answer. Yes, sometimes it has to be to do with your stakeholders who need an exit, then for that you do that. So I think the first thing you need to do is the why. We always think that in a good company, there will always be a market. You can have a valuation up or down, but there's always a market for a good company. So yes, I think once you know the why, I think then it's a question of preparing yourself, getting the house in order, because in public market, it's not just the founder, multiple things below finance secretary will have to get used to the process. And then I think there is this overhang thing that once you go to public, there's a lot of stuff to do. It's not actually. It's pretty streamlined in terms of what you're supposed to do. Importantly, I think what a lot of people are looking to see is what is your journey, what is your profitability or the path to profitability is a question which everybody asks. And so long as you have a very clear answer which is explainable, right, whether it's now or 1 year, 2 years later, I think then there is definitely a reason for you to go. It is a capital form which is available quickly after that. If your business needs more capital later on, follow-on offerings are much quicker than an IPO process. So it helps you a lot, right? And the private capital market right now is not in the way it used to be 4 years ago. So the public market is a lot more sort of buoyant, and it is going to be like that for a while.
Throw some numbers for us, Akshant. How much of the growth that you anticipate in the future is likely to be driven by inorganic growth? Blinkit, what you saw with Paytm, the recent deal that you've done to get into the whole experiences space, and Vijay is here as well. Will M&A drive future growth, and what kind of capital allocation are you likely to make on account of that?
So it's very hard to say that unless you know what you want to do in future. I mean, at this point, we don't know if there is, or don't know of any other business that we want to build beyond the 4 businesses that we have. And if there's an idea, then I think there's always this build versus buy, even in this whole...
Is it easier to buy versus build today?
It depends. Like, I mean, food delivery we built without buying anything, right? In case of District, we bought Paytm's business because we were building it for a while and realized how hard it is to scale the business given the market dynamics. So M&A made sense. In case of Blinkit, M&A made sense because you need a team that is experienced in retail market in India, and we had no experience in-house. So I think it's very context-driven. I don't think we are... we have to be objective about taking these calls depending on the context.
Alok?
I think it depends on what your core competence is and what are you buying. I mean, in our case, we made a couple of acquisitions where was largely about either strengthening an existing vertical or like adding a new vertical to our business. And I think the preference usually is that if we can build it right, because there's a lot of variables that you can't control that you bring in when you do an acquisition, right? And then
the integration challenges.
The integration, the culture, the technology integration, etc. But I think companies like us tend to typically want to do everything organically as a preference, and we'll only acquire when we find something really exciting out there, which we think can add value to what we do.
But Alok, do you see M&A as being a growth driver for the future?
Not for us. Our DNA is more built, as Alok also said. We have rarely ever invested into anything, and it may take time, but it gives so much more strength to the whole business if you build it organically within the company. So, and it gives chance to the internal team to also grow up and take on larger responsibilities. So we are very big fans of building in-house.
I mean, what is the headroom? People are calling Blinkit the Amazon moment for India's internet. How would you describe it, and what do you believe could be the potential headroom for growth?
See, Shereen, honestly, no one knows, including us, right? I mean, most of these businesses are built on latent demand. These are not obvious businesses or problem areas that you're trying to address where you can come up with a top-down size of the business, right? It's not like quick commerce created something new. There was a commerce going on in the country, and it's a new channel which made it more convenient. E-commerce did that to the country 15 years ago, and therefore it grew. Food delivery did that, made it easier to consume restaurant food. So I don't like, at least we don't obsess about trying to even spend time on how big this could be, because we'll discover as we go along and we'll sort of
No,
have
but you do have to make choices in terms of how you intend to build this out further, just given the current demand that you're seeing and the expectation of demand moving higher from here on. So what does that mean in terms of dark stores? What does it mean in terms of future investments into Blinkit, etc.?
Yeah, so I think our job is to respond to what we are seeing on the ground, and rather than actually worry about 5-10 years out. And today on the quick commerce business, we are seeing, I mean, the way we're trying to therefore answer that question for ourselves is to go to smaller cities and open a store and see whether there's a product market fit for this business in those markets or not, right? So we started with the top 4 or 5 cities. Then we said, okay, let's launch the top 15th city in the country and see if it works there. You know, it did well. Then we're like, well, let's open the 40th largest city in this country and see if it works there. So we're on that journey right now to see how deep this market is. And, you know, one is like whether this works in a city or not. And second question is, okay, within a city, how large this market is, right? Because if you, let's say, launch quick commerce in Dehradun, does it work only in 1 location or 5 locations or 10 locations, right? So I think all of this, at least in quick commerce, for us is something which we're still discovering. In food delivery, I think it's played out now. We are now, say, in 750 cities. You know, we know it works everywhere in those cities. All of those cities are profitable today, are growing well. So I think more predictable in terms of how growth will shape up in that business from here. But quick commerce, I think, is still very early in terms of how large, in terms of us having a point of view on how large this opportunity can be.